Hey guys, Chad Trades here. So over the past 2 months, I've made over $50,000 trying these entry and exit trading secrets. Now, if you guys don't know how I trade already, I'm a trend pullback trader. So I only trade with a trend, but I wait for pullbacks to get into that trend continuation. So that setup is easy to understand, but it's hard to know exactly when you should enter on that pullback and when you should exit the trade. So what I did is I gathered data from all of my trades over the past 2 months and found some really common patterns in all those trades that's been really helpful for myself. So I figured I'd share this data with you guys, so hopefully it can help you as well. All right, so you can see this is the data right here. And if we look, this was July. I took 18 trades in July. And this is June. I took 13 trades in June. So the first common pattern I found, this is for entering your trade, is going to be looking at the 5-minute MACD. Now keep in mind, there's a few different confirmations I use to actually enter the trade. Those are mandatory. These two things, the 5-minute MACD and the 4-hour time frame, these are things I was a little bit unsure of, and it provides extra confirmation to entering my trade. Or for example, with the 4-hour time frame, it's going to tell me when to scalp it or when to hold it to new highs. And I show all that in here, right? So this trade didn't break new highs, right? Because of what the 4-hour time frame was doing. These 3 trades did break the new highs, so I would have made way more money on these trades because of what the 4-hour time frame was telling us. All right, so let's just start from the last trade I took, okay? Because these are the most recent trades. So trade number 18, this is the last trade I took in July. As you can see, I went long on this trade. We had consistent green candles, but we also had a bearish market structure. The 5-minute MACD was about to cross. It did break new highs, and I ended up making around $2,400 on this trade. All right, so this trade was on gold futures. I'm on a 4-hour time frame, and I took it on July 30th on this day, okay? So the black area is the actual trading session, and then the gray is the overnight session. Okay, now what we can see here is, first off, we're getting consistent green Heikin-Ashi candles in the pre-market. So this automatically tells me that I'm gonna have a higher probability if I look for a setup to go long today, right? Because typically with these Heikin-Ashi candles, once the color changes to red, right, we continue staying red. Once it changes to green, we continue staying green. So that was the first thing I noticed. Now we can see also during this day, we were kind of mixed. You know, we were starting to get a bearish structure, like we were making these, lower highs, lower lows. Then it started to change where we made a new high, we're making higher low. So we're kind of easing into a bullish market structure on this specific trade. So once again, all the flags were there to only focus on long setups. And since we're starting to get a bullish market structure, right, it also told us that we should probably hold this thing to new highs and give ourselves an opportunity to hold the trade longer and make a lot more money on that specific trade. Since we have that bullish market structure, since we have the green candles, the 4-hour time frame checks out to hold longer. So that was the first thing on the 4-hour time frame. So basically this combination tells us that we should hold it to new highs and we should have a lot bigger trade, all right? It tells us when to exit, okay? Now, as far as when to enter, we look at the 5-minute MACD, we can see it was about to cross when I entered this trade. So once again, we knew the trend was up. We're focusing on long setups. Now we just wait for a pullback because once again, I'm a trend pullback trader. We wait for the pullback. We got it right at market open. I entered around this point. You can see the 5-minute MACD was about to cross on here. So once I see those things, then I go to the 2-minute time frame and I look for my mandatory confirmations, which is basically, once again, the MACD to cross on the 2-minute time frame. Then I'm also looking for a green Heikin-Ashi candle with no wick at the bottom, like this one right here. So once this candle closed, this is where I actually entered the trade. I also want to see some volume kick in on the lows where I could put my stop loss. So I had my stop loss below this candle. Then essentially we would hold this thing to new highs. Now we can see I got out of this thing a lot earlier and I missed out on a whole bunch of money. And you might be asking, well, Chad, why didn't you hold this thing to new highs? Well, once again, all this data I was building, I didn't have this data when I took this trade, right? So me going into the new month, going into August, now after I gathered all this data, right, and I can see all these common patterns in all the trades I took over the past months, now I can see when we have all those combinations where we have a bullish market structure, we have, pre-market green Heikin-Ashi candles on the 4-hour time frame, and then we get all our confirmations, right? now I know when to exit the trade properly, right? Now I can get those way bigger winners versus just cutting the trade at the resistance, right? And again, that's just one example of the trade, but you can see like whenever we get yeses on whether we break the new highs or the new lows, whether we're going long or short, we tend to have consistent green candles and a bullish market structure. We tend to have consistent green candles and a bullish market structure. Broke the highs. And then we can see I went long on these two trades. Well, we had consistent green candles, so I still know I want to focus on long setups, but the market structure was bearish, right? We're under that 4-hour EMA still. Same thing with this trade, consistent green candles in the pre-market, but we had the bearish market structure, okay? And what do you notice about these two trades? Right? Both of them did not break the new highs. So yes, we know we want to go long because we're getting those consistent green candles, but the bigger market structure is still bearish. So it tells us when to exit, right? It tells us that we should scalp the trade because of that bearish market structure. And again, these two trades didn't break the highs, right? So that was the pattern I noticed with that. I can show you an example if you don't really know how to read if it's a bearish market structure or not. So let's go ahead and go to trade number 5. All right, so if we go into my Discord community, go to the trade recap section, as you can see, this was on July 8th, and I went long on natural gas, okay? So going back to this is my 5th trade of the month of July. That was this trade right here. So let's go and go over this because now I know going into the next month, right? Because this whole month I basically was not holding to new highs, right? I didn't know when to exit properly. I was kind of just scalping everything. I had a great win rate, but I missed out on a lot of money because most of my trades would have broke new highs and I would have had a lot bigger winners. So anyways, this is what my trade looked like. It looks like I got in at around 8:30 my time. And by the way, guys, if you want to join this Discord community, inside of here, I show my trade recaps every day. I show my trading plan. And we also have all kinds of other members you can chat with, network with, and share trade ideas with each other. Like I said, if you guys want to join this community, it's completely free and open to viewers of this YouTube channel. All you have to do to join us is go to the first link in the description below, or just head over to this link right here. We'd love to have you inside. So anyways, this trade was on natural gas. Now, how did I know that this is a bearish market structure? Well, if we look at July 8th is when I took this trade, that is right here. Okay, now what do we notice? We're trading below this 45 length EMA and we're consistently making, lower highs and lower lows. Okay, this is an obvious bearish market structure. So at this point, it was obvious to not hold this trade to new highs, right? Because we're still in that bearish market structure. But if we look on here, now I'm going to zoom in, right? If we go over to July 8th right here, you can see we got our first set of consistent green candles in the pre-market that we had in literal weeks, right? We only had a few green candles over the past few weeks and none of them were consistently green. Right, so once I saw they're consistently green, I knew that long setups were higher probability for the day, but I also knew since this bearish structure that I don't want to hold to new highs, right? And you can see in my trade recap, that's exactly what happened. I was able to get a nice scalp out of this trade, but I also knew that it probably wasn't going to break new highs. As you can see, we made a lower high off of this high and it ended up selling back off after that. So this trade, I treat it more as a scalp because of this bearish market structure. So what I kind of conclude off this, based off all of these trades over the past 2 months, is my conclusion is I want to see consistent candles that lines up with the position in the pre-market on our 4-hour time frame. And this is going to tell me whether I want to go long or short on the day. If we see consistent green candles, Heikin-Ashi candles on the 4-hour time frame, we're making higher highs, higher lows, if we're going long, then obviously I want to look for long positions. Same thing on the downside. If I see consistent red candles in the pre-market, we're making new lows, then I want to focus on going short. Okay, so that will tell me what position I'm taking, whether it's long or short. The next thing I want to see is I want to see the 5-minute MACD either flatlining, about to cross, or it matches with the position. Okay, so if I'm going long, I want to see the 5-minute MACD in a buy signal, or I want to see it about to cross, or at least want to see it flatlining. And then obviously from there, I go into the 2-minute time frame and I look for volume. I look for the 2-minute MACD to cross. That's going to tell me when exactly to enter the position. So now I know if I'm going long or short on this box, then I know when I'm going to enter the trade, right? Because I want to see a pullback and then I want to see the 5-minute MACD look something like this along with my 2-minute confirmations. Okay, so this will tell me when to enter. And this last box right here is going to tell me when to exit the trade. Okay, so I said hold till new highs if market structure matches up. Okay, exactly what these 3 yeses, they all broke new highs. What do we notice? We had consistent green candles, so I knew I want to go long. The MACD was in a buy signal. Okay, so that gave me confirmation to enter the trade along with the 2-minute confirmations. And then for the last box right here, right, we're also in a bullish market structure. Okay, so bullish means green, it means long, right? We had consistent green candles. So these match up together. Okay, so this tells me I should hold the trade to new highs. And instead of making $1,000, I probably would have made $2,000 or $3,000 on this trade. When it's more divergent, for example, trade number 5 we just went over, right? We're getting consistent green candles, but the market structure is bearish. Okay, so those things don't match up together, which means I'm not going to hold the new highs. I'm going to hold just below the resistance level. I'm going to trade it more as a scalp, right? I'm still going to look for my entry confirmations and all that stuff. But going back to this trade example, I'm still going to get into the trade based on, the pre-market candles, but I'm not going to hold it to this next high, right? I still have a nice risk reward even though I'm scalping this trade, but I'm going to trim this thing, just below the resistance levels that matches up with a good risk reward ratio. So anyways, this is my $50,000 worth of data that I gathered putting together these entry and exit secrets. Like I said before, if you guys want to join our free Discord community, inside of here, I show my levels, my trading plan every single day for the S&P 500, for NASDAQ, and for gold futures. These are the 3 main things I trade. Plus, you'll also get access to a whole community with all kinds of other traders you can chat and network with, ask questions. I'm active in here. Anyways, guys, like I said, it's completely free to join. We'd love to have you inside. If you guys want to join us, all you have to do is go to the first link in the description below, or just head over to this link right here. That being said, guys, as always, I hope you have a great rest of your day, and I will see you in my next video with another day trading lesson.